Hi there, Stan the Annuity Man, America's annuity agent, licensed in all 50 states and Puerto Rico, founder of Contractual Guarantees Only, CGO. We only look at what an annuity will do, not what it might do. Today's topic is who regulates variable annuities at the federal level. I'm going to go through who regulates annuities at every level, just because there's more than just variable annuities. But I'll do that after this. So variable annuities were put on the planet, I think 1954, by TIAA back then, and they were called TIAA-CREF. It was a very unique product that you could put mutual funds, they call them separate accounts, but mutual funds inside of a life insurance policy, and in a non-IRA account, that potential hypothetical growth could grow tax deferred. So it's been around a good bit, but it's interesting, like right now, it's kind of a dinosaur. You don't see a lot of that anymore. A lot of people don't, I don't think agents and advisors even show that, because the average annual fee is between 2.5% to 3% every year for the life of the policy, in most cases, which is a lot. I mean, there are some no-load variable annuities, but they're few and far between, to say the least. Variable annuities, and the question is who regulates them, that's a security, okay? Stocks, bonds, mutual funds, variable annuities, you know, that's the SEC, that's the NASD, that's FINRA, all those fun guys and gals there, they oversee that. You have to have specific licenses to sell and recommend variable annuities. Same thing with RILAs, registered index-linked annuities. Those are security products. You know, back in the day when I worked for Dean Witter, Payne Weber, UBS, and Morgan Stanley, back then you needed a Series 7 test. I think there's something else for registered investment advisors now, RIAs. But the bottom line is you need to be smart, and you need to be able to pass that test. Most annuity agents could never pass that test. It's a very hard test. I don't know if I can say that. It just requires broad depth of knowledge of everything, options and munis and all the stuff. But those are regulated at a federal level. So SEC, FINRA, NASD kind of overseeing all of that. And that's a good thing. I mean, I'm glad the bar's high for that. But on the fixed side, which is MYGAs, multi-year guarantee annuities, single premium immediate annuities, deferred income annuities, qualified longevity annuity contracts, indexed annuities, income riders attached, those are regulated at the state level, okay, not the federal level. So for instance, indexed annuities, which were put on the planet in 1995 to compete with CD returns, even though they're pitched and sold and fraudulently put in the category of market growth, it's a fixed annuity, it's a CD. Unfortunately, the overhype is ridiculous on that side, and most of the people that are doing that overhyping aren't qualified to talk about, they wouldn't be qualified to even talk about, securities. So I just find it interesting, because when I came out to the annuity space, because I saw a gap for the contractual guarantees only message, which I dominate now, we're number one. The reason for that is, and when I came out, I couldn't believe the growth story that agents were talking about with annuities. I'm like, what are you talking about? If you're going to do growth, back in the day, there was a couple of very, very good no-load variable annuities that you could manage, or you could have someone manage for you. But of course, they were purchased by big companies, and that's where good products go to die, and they died. So there's not a lot of choices out there, in my opinion, for the no-load side of the variable annuity choices. I always tell people, if you want to buy mutual funds, go buy mutual funds. You don't need a variable annuity to do that, and you don't need to pay 3% in annual fees to do that. So that's a tough ask for anybody managing a portfolio to be at -3 every year before you even start. So what you need to know about the overall regulation about annuities are regulated, whether it's the federal level with RILAs and variable annuities, or if it's at the state level with fixed annuities. I mean, there's the NAIC, the National Association of Insurance Commissioners, NAIC. They do a fantastic job, and they oversee the fixed annuity space, and they work in conjunction with the SEC and FINRA on all annuities to make sure that the consumer is safe, that the companies are solvent, that they can back up the claims contractually. They do a great job. And that's the reason you don't see a lot of articles about annuities and those type of things. You might see a couple. Recently we saw some on private credit. I've got my own feeling on that. I can't say it on video, but I'm pretty sure I'm right. If you want to just shoot me an email, stan@theannuityman.com, I'll give you a quick call and tell you my take on that. But that's a non-event, in my opinion, for most annuity carriers. There are a couple that are on our screen. But getting back to the question, you better believe FINRA and SEC and National Association of Insurance Commissioners are on top of all these issues going forward, because with 15,000 people turning 65 every single day, they're looking for contractual guarantees. They're looking for some transfer of risk strategies. And the National Association of Insurance Commissioners, FINRA, SEC, they are doing a good job to make sure that these people are protected, because you can't do retirement over. Now, if you're chasing yield, if you're chasing the too good to be true product, then you get what you deserve. You buy annuities for what they will do, not what they might do. And for us, it's very simple. We ask two questions. What do you want the money to contractually do? When do you want those contractual guarantees to start? And from that, we're going to quote all carriers, and for lifetime income, it's A+ or better. And then I get involved in the recommendation, and then you make your decision on your terms and your time frame. So it's very, very simple. We've made the process very simple, and we'll tell you if you don't need an annuity. I mean, we really will. After discussions, that happens all the time. Or maybe I'll say you're too young, or the timing's not right, or wait till here. We tell the truth so we don't have to remember anything, as my grandfather Hunter Garrison once said, and I remembered. Do me a favor, go to my site, theannuityman.com. Check that out. You can run quotes. You can download my 6 owner's manuals. You can shoot me an email, stan@theannuityman.com. And you can also schedule a call with me. And if you don't get me and I'm traveling or somewhere, just tell the person, hey, just reschedule me for Stan, and I'll get on the phone with you. I'm really enjoying my interactions right now on the phone, because I'm learning what's out there. I'm learning what people are looking for. I'm also learning about the really bad sales pitches that are going on that I'm combating, and that now I know what to combat and what to talk about on these types of videos. One last thing, above my head, clock spinning, is another video I did on annuities being commodities. I don't care about the brochure. I don't care about the name. All I care about is the contractual guarantee, the rating, and then what I recommend. That's it. It's real simple. Break it down to that. A couple of my competitors, I think. I'm not sure competitors, because I am who I am. But they, download the brochure and download this. Who cares? Who gives a crap? It's all about the rating, the number, and my recommendation. And I'm batting 1,000% over the last 3 decades. So, with that being said, appreciate you watching this video, and I'll see you on the next one.